We're live. All right. Welcome everybody to the show today. I am thrilled to have Nema from Lightning Docs, CEO and founder of Lightning Docs and partner at Forge for Law, chatting today about legal documents. This is a great introduction that came from Derek Gruner. I don't know if many of you caught the last show of the year we had Derek, also a lawyer, chatting about debt and interest rates and all the impact on everything else, which is kind of interesting given Trump's tweet on SFR and institutional ownership, but we'll save that for another conversation that is brewing. Anyways, looking forward to have this conversation with Nema and talking about Lightning Docs legalities and how all these things come together, the cost, the waste, the automation, the AI, how we can make this whole thing better. And it's incredible to kind of dig into various parts of transactions in terms of real estate. And there's so many opportunities that we can use to automate and make this life better. This will be my cheapest conversation with a partner of my life of a law firm. So I'm going to relish every single second of it. And again, like as always, this is brought to you by IrisCX. IrisCX is AI and automated AI remote maintenance software, inspection and maintenance software for property management. We help you see the problem before you go there, help you inspect it, use AI to create all your scopes so you can have a complete perspective on the problem before you go out and dispatch your crew. Folks listening, you're welcome to engage. Obviously, we love questions that come throughout the show. And if you're listening on the podcast, like, subscribe, all those things make it easier for people to find the show. Now, Nema, thank you for joining us today. I'm very curious why a lawyer who's having a successful practice and working and billing probably upwards of 2,200 hours a year would endeavor to start a prop tech company and add on to that already pile of work. Let's get started. A bit about your background. How did you get in this role? And what's the problem you're solving with Lightning Docs?
Yeah, so I graduated from law school in 2010, and that was not a great time to graduate law school. And so I was looking for a job very quickly, and I had worked at a boutique law firm my first summer in law school, and that's when I was introduced to representing kind of private lending and understanding private lending at all as a space. Did not know that there, I assume probably like most people do, that the way that you get financing is you go to a bank, and it didn't matter whether you were a real estate investor trying to get a fix and flip loan or whether you were a homeowner trying to buy their first house. Kind of assumed that we all had the same pathways, just didn't understand that the space existed at all. Yeah. And quickly started, just learning a lot about the concept of private financing and the perils that come with it. Sure. And then it happened to be in a really good time and place for that industry, right? That was
2010, of course, right? The back end of a lot of volume transactions, et cetera.
Yeah. And so, I was really fortunate to just kind of be at the start of a burgeoning industry. And then that industry got supercharged right around 2015. What was happening was we were a California-based law firm. We're writing loan documents for our clients, and they're starting to kind of creep outside of the state a little bit. As you can imagine, Florida, Texas, kind of the big markets you would anticipate if you're a private lender and you're going to be giving somebody a fix and flip loan. What are the other areas that are having good migration patterns and seem like good places to invest in? So
the smile states.
That's exactly right. Right. And so we had started working with all these outside lawyers and saying, hey, here we've got this set of docs. Can you review them? Can you, we want to start drafting loan docs for our customers out here in California. And then in 2015, a kind of a secondary market started getting created within private lending. So before, if you're a private lender and you wanted to raise money and you wanted to actually build a business, the way you would do it is you would just go out basically to high net worth investors, say, hey, want to invest in my debt fund? And I'll take the money that you give me and I'll go loan it out to that real estate investor. And as much money as you're willing to give me is as much money as I'm willing to put out. And that's really the end of the capital raising cycle. There, you're really sophisticated private lenders at the time might have been able to get a warehouse line of credit from their local bank to try to juice, their funds under management a little bit. But, a really, really, really big fund, maybe in its best day, could have maybe $500 million of assets under management. And those were the unicorns in the space. There was no such thing as being able to really build this business for scale. But then in 2015, the secondary market got involved. And so now you're taking this paper and you could originate a loan in Oklahoma, and there's a loan buyer out there who's trying to buy tapes of these, pools of these loans. And then they can go out and they're able to go to Wall Street and securitize these loans. and it started creating a lot of liquidity in a space. And so you really didn't, and it started looking a lot more like kind of your traditional consumer mortgage banking space, right? Go originate the loan, someone else is going to buy the loans, they're going to package the loan, and you just kind of recycle your capital over and over again. And so you didn't need to raise and go find a bunch of high net worth investors anymore. You could be able to have a fairly small balance sheet, maybe 10 million, 20 million, and then recycle. And all of a sudden you're now making $1 billion in loans a year, even though you never raised $1 billion of capital yourself. So
let's pause that. Let's pause that.
Yeah.
Pause that for a second, because the concept of that multiplier effect probably isn't totally easily heard by everybody. So because you're cycling the loans and you're flowing them through, you're able to have higher number of assets under management, but you're not actually carrying the liability of those, or the liability of those loans back to the LPs.
Correct.
Because you cycle the loans through, and that's because you've collateralized them, or you've packaged them up and resold them in the secondary market. Is that what you've done?
Yeah, it's a loan sale typically, and that's really the way that the capital is recycled. It looks, it's very, very similar to the independent mortgage banking model. We go to ABC Home Loans, right? What are they doing? They're using a warehouse line of credit to fund the loan. They're holding it on balance sheet for about 30 days, and then they're selling it off to Wells Fargo and Fannie Mae and everyone, this entire secondary market system. But that's all agency, right? There's Fannie Mae and Freddie Mac that really facilitated that in the traditional consumer mortgage market. But nothing like that exists in private lending, right? Until about 2015. And then in 2015, they were able to really take those loans, and you could sell, you could originate the loans, hold them on balance sheet similarly for about 20, 30 days, sell them to a loan buyer. That loan buyer is going to start packaging those, and they're collecting 300-400 of those loans. They'll go to Wall Street, get a financing facility built against it, and then get, the securitization set up basically where, your bond investors, your Goldman Sachs, the Wall Street banks that you would think of can go and invest in the debt that's kind of surviving out there. And then you're just recycling that loan. If you're funding 10 to 20 million dollars of your own capital, but you're getting that money right back in the door, and you just keep building your business over and over again. And that time period went from, let's say, 20 to 30 days down to 5 to 7 days. And so now you can imagine the multiplying effect that that's now having. So you really didn't need to have these very large balance sheets anymore. You were able to just sell the loans fairly quickly and start building businesses that were really more origination businesses rather than balance sheet businesses, right? The traditional business model would have been all the high net worth investors. They're primarily looking for the yield, the coupon on those loans, right?
Yeah.
Fixed loan. But instead, what they're really doing is they've switched the model a little bit, which is, well, now actually you're predominantly getting the fee income generated from originating those loans, right? And so now we're just really recycling the capital, and that's you're getting much greater outsized returns, even though you're not really holding these loans on your balance sheet anymore.
So just to compare and contrast, like where you've got the high velocity loan business versus the large balance sheet business. Is a large balance sheet business now considered to be relatively inefficient use of capital, given the ability to cycle the capital through?
It's interesting. So the private lending industry is rapidly evolving right now. And the biggest change in that is that last year we started actually getting rated securitizations of these mortgages. Even though they're like 1-year loans, you go out there and you can get a Moody's rating, and these agencies will rate the paper, and they've created these credit facilities that will actually let these kind of loans come in and out. So if a loan pays off, that's fine. You can reload another loan that gets originated, right? So they've been able to get this really structured financing in place and get AAA ratings, the whole thing, just like any other loan product that goes out there. But the problem if you run into is the capital market system is hot when it's hot and it's not when it's not, right? So it's one of those things that's kind of constantly in flux. You joked earlier about tweets, right? So a tweet can make a big difference in capital markets, right? So if there's perceived regulatory risk or the perceived interest rate risk or whatever it might be, it can spook the capital markets investors pretty quickly, because they have to make investment decisions every day. So they're going to choose, do I want to invest in auto loans? Do I want to invest in consumer credit card loan? There's all sorts of investment options, right? If you're a bond buyer, and why would you invest in this versus any other loan, right? So they've got to make that determination in real time, and that's subject to the risks in real time, to the regulatory environment that they're in. And so what that translates to these mortgage lenders is they have to figure out for themselves, what is the safest business? So while I can probably get my cheapest cost of capital out there in that securitization market by recycling, right?
Mhm.
If something goes wrong in that market, well, I can't originate loans, and I don't have a business anymore, right?
Yeah.
So they tend to try to balance that system by having their own, I'd say is instead of having a 10 to 20 million dollar balance sheet, maybe it's $100 million balance sheet, right? But it's no
Right.
longer, you're not seeing these 5, 6, 7. You're not built. The goal is not to try to get to $1 billion asset under management. That becomes very inefficient, and now you have a cash drag problem where you can't even deploy, and now you're putting out
Right.
loans you may not want to. So it really is an intense balancing act of what is the right AUM, and how big do you want to build this business, right? Some people don't want 100. Some people don't want $100 million a month business. It's too much headache. It's not, it's still a very entrepreneurial space, and quality of life matters to the entrepreneur.
So we look at these fix and flip loans. So specifically the challenge there is that you've got short durational loan, you've got a long duration of the capital, and you've got variability in terms of the projects. And then how does Lightning Docs come into place?
Yeah, great point. So back in 2015, I'm just a lawyer. I'm writing loan documents kind of on a one-off basis. And as a finance attorney, it's not that atypical, but we're also charging flat fees to our customers because they need certainty with their borrowers. And if you're doing these small loans, call it $300,000, $400,000, $500,000 loans, you're not charging $20,000, $40,000, $50,000. It's not the legal fees people are typically used to thinking about when they're hiring attorneys, right? We were about $1,000 or so at that time. And so what that created for us was two things. One is I need to get these out quickly because anybody who's taking out a fix and flip loan, speed is everything.
Yeah.
And two, I need to mitigate malpractice risk, right? I want to make sure that I'm putting out good paper and we're not getting sued for it. And so that really created this need to automate. And so we were just constantly thinking about how to tinker through workflow automation. So some of that was, kind of what people, is it all lawyers? Is it lawyers and paralegals? Do we have some, who should be doing this work, and what work should those people be doing ultimately? And then also, is there any sort of automation tools? So, when a loan comes in, do we create a ticket system, and are we monitoring that? What kind of software can we use? So I think like a Trello or a Zoho or whatever, any of these kind of softwares that help people manage projects. And in this case, the project's very short term. It's got a day or two turnaround. So you've got to make sure that the project gets managed well. And the last piece and the key piece in this was document automation. Right. So we take all of the things we understood and learned as lawyers practicing this space. So, is it Guillermo or is it Guillermo LLC? And does he have, is Iris X is my borrower? Who is my borrower? Who are my guarantors? All these rules and all the things I would have learned, and I would have told you when I'm interviewing you about your loan, saying, well, where is the property located? Okay, where's Guillermo? Is the individual? Is the sponsor, is he also in Arizona, or is he actually in California? Because there's different rules that are going to apply based on those facts. Well, where is the property? Where is the borrower? Where are the sponsors? All these locational things matter, right? And where are you? Where's the lender, right? So you've got all these state laws, because unlike kind of your consumer mortgage environment, which is almost entirely regulated by federal laws, all this is almost entirely regulated by state laws. And so you have to then go, okay, where everybody is matters, right? And where the property is. And so you have all these competing state law issues. And so that made us valuable as attorneys, right? Because we could understand that landscape. But then that also gave us, it's mostly a rules-based system. I'd say it's, well, if you gave me all these facts, I'm going to apply these rules and exceptions to rules to these facts. And then I'm going to create a set of legal documentation that ties back to those facts.
But those facts, presumably, given the cast of characters in any sort of investment, you've got a buyer, seller, and the money. That could be 3 different states. So the permutation of combinations could be, let's call it 48 by 48 by 48. And that could be a huge number of different ways of consolidating all this information. And given the fluidity of capital, trying to find the fastest, best deal, you could have a guy in California buying something in Alabama, and the third party, someone else is in Nevada, and all those different laws, the place of jurisdiction for any sort of litigation or eventual litigation, or at least the way the deal has to be done, that all has to be determined in a document. And that's expensive, but not very valuable.
Exactly. And you hit the nail on the head. It's a transactional document. Most people, when they think about loan documents, they think of it as, here's just this thing that I sign. I'm not going to read it just as much as it's like reading a phone contract at this point, right? So I know I need to sign it to get the money. I know that it's very important, right? But ultimately, is most people file it away, the loan pays off, and no one ever looks at it again, right? That's how most loans should work. until they don't.
Yeah.
And then when they don't, the problem is you are moving, on average, if it's a fix and flip loan, it's just north of $700,000 is the average amount, and sometimes it's many millions of dollars. And so now that document is very valuable, and you could have $700,000 of balance sheet risk or buyback risk or whatever it is.
Yeah.
And so I think people appreciate that there's value, but that was the problem we were trying to solve, which is, could I give you something with that would give you peace of mind?
Yeah.
And could I deliver it very quickly?
Well, and in fix and flips, the probability of things to go wrong is much higher than a conventional personal mortgage. And so you've got moving parts in terms of what asset. It could be a dilapidated asset and it's a half-done fix and flip. Well, then what's that? That's really worth nothing to anybody, except for there's paper behind it and there's a liability that needs to be paid. And then there's, depending on how that loan has been moved, there's somebody who holds it that may not want to hold that piece of paper anymore, but they don't want to be in that business. And so there's things go wrong because they go wrong. And it's not because of bad people. Often it's not because of bad people. It's because of bad things happen to good people. Yeah. And how do we protect everybody? How do we make this really efficient so that we can transact more? Because as you mentioned earlier, the real juice is in the fee revenue. Because if I can chase that fee revenue and make that easy, I can lower my cost to transact, and I can do it in more complex environments and have the certainty that we are covered by the various jurisdictions that we're in with which we operate, so we can take advantage of deals and make more money.
You've written my thesis. That's exactly right.
Well, otherwise it's complicated, right? Otherwise you're paying for boring work.
Yes. And that's the thing, right? If you think about where we exist today from an AI perspective, automation is kind of the precursor to AI, right? They're very different things. Automation is rules-based, right? So, funny enough is we don't use any AI in the underlying core product. It is 100% rules-based. And specifically still, right? Because if you're a lender, you actually don't want the language to move at all. You want it to be you want it to be consistent. Right. What you're really selling is consistency. And you need it to be 100% accurate every single time. That's what you're paying for. That's what you're betting on. And so it's a workflow tool ultimately, and that's what created the underlying product in the first place, which was, because at that time it was just as a law firm, I wanted to make sure I could deliver these tools at the law firm and to be able to deliver good documents. And then it also helps all these other things too, right? Like you don't need to worry about training people as much because they're not thinking anymore. I don't have to spend 5 years apprenticing an attorney, be like, here's all the rules in all the states. If the system can do all the rules in all the states and knows the exceptions, and it never gets tired and it never does it incorrectly, right? It starts creating this really consistent end product that creates what I would call the perfect set of docs. Ultimately, is what you're looking for. And but that was still in the delivery of services at the law firm. And then around 2018, what happened was, even though we were really fast as a law firm, we'd spend, turnaround times was usually 24 to 48 hours. Was our turnaround time, and people, that's great if you're hiring a lawyer. We hire lawyers as well, and generally speaking, you're not getting things in 1 to 2 days, right? Yeah. But the problem is if you're originating 100 loans a month, right, that's a big thing to outsource. Sure. And so, and not only do you have a 24 to 48 hour time lag, but then you also have we just changed the interest rate, we changed the loan amount, something little changed. Can you just get it back to me really fast? Well, the problem is you're working with that client and every other client. And so I can't just stop everything that I'm doing and get back to just your thing real fast.
That lawyer is single threaded. Yes. And so ultimately getting back to a queue, and the queue, it works through the queue as the queue gets worked. Gotcha. Yeah.
And so that became all we really did was we took the same product we built at the law firm, which is, look, lenders, and we're not the first ones to do this, right? You could think about LegalZoom or others where kind of call this DIY legal, right? Yeah. Probably a better way to describe it, and I think this is the more apt description, which is it's really TurboTax, right? Yeah. Because TurboTax, if anybody's ever used it, it's a good system, right? You trust it. It produces good returns. I doubt your CPAs are going to do much better for simple transactions or for things that can be done. There's risk, right? Their TurboTax is going to theoretically have a really good interview that asks you all the right questions, but they're not a CPA. They're not troubleshooting in the background, right? And it's but at the end of the day, what you're getting is you're getting your 1040, you're getting the documentation based on the facts that you gave it, right? And it's the exact same thing on Lightning Docs. So Lightning Docs is the same tool that the lawyers are using, right? But ultimately, it's licensed directly to the mortgage lenders, where they can use it and they can have their people stay up late Sunday night,
Sure.
working away and having control over the documentation process, and also take on more risk, right? Because now lawyers aren't involved, and so you can't sue Lightning Docs because of your typo, right? Your typo is your typo, right? But you
Right.
can sue your lawyer if they type a typo, right? And typos matter.
Well, and like TurboTax, it does a review. It can do a review afterwards and offer, this,
Correct.
and you can start punching that out to other services that could be considered. Hey, we noticed this, more revenue lines for Lightning Docs or for Fortra.
And that's exactly right. We see them as complementary coexistence, because and some people, right? My parents have very, very simple tax returns, right? But they still go to a CPA. It's peace of mind, right? Some people are still going to go to lawyers, and I always tell people, like, if you can go to a lawyer, like, you should, like, I run a software company now, but if you can go to an attorney and it makes sense, you should go to the attorney, because you are shifting some of the risk to them. They're legally trained. They should be, a good lawyer should add value no matter what. It's really trying to serve marketplaces where, hey, like, I would love to use an attorney, but I can't. I've got too much scale. We can't wait 2 days. Whatever there's lots of reasons why it doesn't work, right? Fee sensitivity, whatever. There's a lot of reasons why people choose to use DIY legal. Some I think are better than others, but really giving people the choice to pick a lane and still feel comfortable that they're getting good legal product.
Well, I think there's also, like, as in any arbitrage business, the goal is to become most, as automated as possible.
Yes.
So there's an eventuality where there's competition is going to pressure on the rates, the fees, the closing, all those things. If I want more deals, I've got to be easy to work with and cheap to work with. And so, or I'll say fair to work with from a pricing perspective. And so I'm going to want to automate all those things that get in the way of my speed to close, because I'm a cash cycle business, and my margins to operate, because I'm a cash cycle business. I'm a margin business or arbitrage business. So, like, those two things are things that make my business more expensive and move slower. So, as we talked about earlier, we were talking about the efficiency of the capital. Conventionally, I had a $500 million AUM backed by that kind of debt, and I had the lawyers that manage all that stuff. Now I can run to a much bigger volume P&L debt business by moving that capital through and recycling that capital, as we talked about earlier. But I got to be safe in terms of what I'm doing it, and I've got to automate that as much as possible. It's like kind of like the old, like, to make a trade 20 years ago was $200, and now it's free, or $6, right, or $4, because everything else has become automated along the way. All the risk has been generally mitigated, and then by and large, you're just working on the new problems that you earn to solve by the way that you're transacting the business. So that would be who you sell that loan to, all those things. But these parts I used to worry about, they're gone now, because they've been taken care of by an automation. And the automation, as you mentioned, doesn't get tired, doesn't make mistakes, does what it does because it's coded that way. So now I can grow my business and not have to worry about that stuff. So then you mentioned your customers are the lenders. So when you go to market for lenders, what kind of lenders are you looking for?
Yeah, so it's, that core really didn't change, which is basically non-bank lenders traditionally is who we work with. And they have a very similar problem, right? The problem that we've solved, that is the complex problem, is that they're operating in a 50-state landscape, and we understand the compliance side of that 50-state landscape. And so when it comes to the documentation, we already know the way they are thinking about their transactions, and it's different than most mortgage lenders. And so I'll give you an example of that. Most of these loans and most loans to real estate investors is real estate investors like to hold the assets in limited liability companies, right? They don't want personal liability. And so, but most legal documentation and most mortgage documentation is designed for the consumer mortgage world. Well, guess who are those borrowers? They're all individuals, right? Yeah. And so, it's funny because it's rudimentary issues. So even things like personal guarantees, which are very common in real estate investor transactions, right, but are non-existent more or less in consumer transactions. And so it's a lot of that sort of stuff that I've only practiced in this world where it was always this business purpose, investment purpose loans. And so these are all that's how I learned how to do everything, was kind of assuming a baseline set of facts, which was, yeah, you probably had corporate ownership, but you didn't have to. It could have been an individual, but how does that differ? How do these people like to structure their transactions? Even things like, for example, we both do these short-term fix and flip loans, but now, even more than half of the product itself is actually being used for the 30-year debt service coverage ratio, those DSCR term rental loans.
Yep.
And so those have their own unique, kind of they look a little bit like kind of traditional, let's say, credit union or bank financing, but they're a little bit different. They have different prepay penalties that are usually associated with them. They have oftentimes interesting amortization. So they'll say, it's got a 10-year IO period, but there's also it's also an adjustable rate loan. So in year 7, even though the first 10 years are IO, year 7, the interest rate's going to change because it's also an ARM. And so, those sorts of things can create a lot of complication in drafting loan documents, particularly at scale. And so it's really but we knew that because our customers were those people. And so we were never trying to anticipate where they were headed. They were just telling us, hey, we're going to build this product, or we're going to do this. And if one lender builds a product that looks like that, well, guess what? Other lenders, because oftentimes what they're doing is they're building a product, they're going to their loan buyer saying, if I build it this way, will you buy this sort of loan? The loan buyer says, sure, we got comfortable with that. So for example, bank statement loans has become a big thing in DSCR lending rather than relying on traditional underwriting methods. Yeah. And so, but once some investors kind of get comfortable with that, well, then guess what? Then a bunch of the originators start originating. So by the time that new originators come to us or new lenders come to us, well, we've already there's very little where we're creating something novel anymore. 95% of the time.
That's the beauty of what you've done here, right? I think this is when I look at, if you stand back, way back, and look at services as a business, professional services specifically, we call them professional services firms, SPFs, consulting, accounting, legal, right? All the pyramids we all know and love. There's such an aggressive awareness around the service that's been bespoke. If you stand back and take all those different transactions, and I'll say that were conventionally horizontal, and you slice the verticalness of them, and you slice out the little piece of it, you talk about unbundling. And I love the conversation about unbundling, because unbundling to me is I don't like paying for the stuff I don't want to get. And so the unbundle begins to create specialization. So from a services perspective, we're seeing this just everywhere in terms of it was originally a bespoke service, and then it became unbundled, and then it got specialized, and then it got productized. And then now the scope of all of that begins to grow even bigger and bigger in terms of what more can we unbundle, specialize, productize, and then automate. And ultimately, you look at some of these things, particularly with all the things that have been done offshore, they're already signaling that they're prepared, that they're ready for an unbundling, a specialization, and a productization. And that kind of life cycle. I mean, when you take a look at legal, obviously you guys have your specialization and you productize it and the automation of it all. What do you think is next in legal?
Well, it's really fascinating, right? Because it's so funny. Very few people have been able to do what you just did, because that was the genesis of Lightning Docs, which was thinking through the unbundling of a legal service. And there was a book that I read, 14 years ago now, something like that, called Tomorrow's Lawyers. And it talked about AI and machine learning and all these sorts of things way back then. None of those things were at all were applicable, but it was discussing and that book really talked about this concept of lawyers are trained to think about, and they have to, because if you think about malpractice risk is you should have known how to basically provide this legal service. So here's all the things that would have been done if you're, let's say, you're going to, you're buying a business, right? So you're an M&A attorney. Okay, great. Here's the 30 things that are done in an M&A transaction, right? And when lawyers are trained and thought that way, they think of, well, great, I have to do all, and the worst case scenarios, they are thinking, I, the attorney, have to do those 30 things. So at a baseline, it's understanding, well, no, you, attorney, do not, right? Let's just get from an initial list. What actually requires you, the highly skilled trained attorney? what are things that your paralegal could have and should have done? What are people maybe that are more staff oriented could and should have done? What are people that are maybe outsourced? So like just thinking about the division of labor as just the first outset. Okay, so let's split this legal task into 30 different points to it. And then you go, well, actually, do I even need a lawyer? Do I need a human at all for any of this? Right?
Because it's
I've
on.
just automated
It's a clock. It just ticks.
Correct.
Yeah.
And now we're in 2026. Okay, well, wait, hold on. But how much of this is just agentic AI could have handled all throughout it? Which is, I'm asking the same things. I've got this there's this interview occurring, and there are certain key triggers that you are asking throughout the interview that will help determine the follow-up questions I will have. But again, it's mostly repeatable with a little bit of nuance. And so you're kind of seeing, and that's really where I would say it's fascinating because lawyers still, which is, when I kind of funny backstory, when we created Lightning Docs, I had no intent of ever licensing it to mortgage lenders. It just was not on the roadmap. All I was thinking about was, hey, we got really, really good margins on a flat fee business at a law firm. Could I take this exact same proof of concept that we had here, and could I just go to the law firms and go, hey, you probably have a bunch of inefficient practices that look just like ours, where you guys are sitting on a bunch of forms and you're all struggling. Where's the original template? And it's the same problem, I guarantee, is happening in most law firms right now. And I was like, oh, we'll just go to the lawyers and do the same thing there, and we'll automate a bunch of law firms, basically.
Yeah.
And the fascinating thing is that I learned this over time.
Yeah.
Lawyers,
I know you're going to go. I know you're going to go on this. Go.
Lawyers are not entrepreneurs. Doctors are not entrepreneurs.
No, they're not. And you compete with revenue. If you compete with revenue, you're selling Uber to taxi companies. Like it's complicated, right? And so
Uber to taxi companies. You just nailed it. That's it. That's right? The problem.
And so you follow the money. Who's actually paying for that bill? And you work your way upstream the value chain to the buyer. This is the hell yes conversation, right? So then who is hell yes for this problem? How is it a priority? How is it on their to-do list? How is it unavoidable? What are the options and why do they suck? And that forms that hell yes structure for an entrepreneur, right? And I think what's really incredible about what you're talking about is that, like, how did you find those debt lenders? So, because like as an entrepreneur, often you can get augured in on who you think your ICP is and be totally wrong, because it seems obvious from a consumption perspective, but then from a pay for it perspective, all bets are off. So how did you find the debt lenders as your buyers?
So it's kind of a funny story. I mean, going back, the thesis was not to license this out to mortgage lenders. The thesis was to build law firm efficiency. And so, but what happened was we were going to lose law firm customers because we had really upset lenders. And from them, it wasn't a cost issue. It was a timing, which was, I need to close 30 loans today.
Yeah.
And I cannot close 30 loans today. I do not have the attorneys to do that. And so they really forced our hand and saying, look, we'll fire your law firm. We'll find some other solution. So either, aren't you guys using a piece of technology or something to do it anyways? Can we just use your technology?
Yeah.
Right. And so, and at the time we had just hit our stride at the law firm of getting these really efficient margins. And I was like, I don't want to kill the golden goose. Right.
100%.
Like, I don't want you to have, because I can only charge $200 or so on this thing, and I can charge $1,000 over here. Like, even with the extra costs provided, my mindset at the time was, well, there's just more per transaction that I can get without ever realizing that I would never get the scale at the law firm, right? It just didn't. And so, but I didn't want to kill the golden goose at that time. And so for 3 years, we never mentioned it. We did not let anybody know that it existed. It was only on it was the speakeasy of doctors. They had to know the secret. They had to ask to use it. And we had to try, and we would always try to convince them, please don't get on the system. Right. Here's the reasons why. Right. And it wasn't until 2021 in which we started seeing what was happening on the software side. And we're like, oh my gosh, like we made a decent amount of revenue and it was headache free. Right. Yeah. And the customers loved it. Like it was one of those things because no one was doing this. Right. So all these other systems of getting loan documents was quite inefficient. And so it was just this wonderful experience where the customer's happy, we're happy. It's it was a hobby.
A happy lawyer is hard to find.
Right. Well, and things like it was a hobby for a few of us. Like we just tinker with it here and there. Like half the time we're doing our own development. Like it was just such a low budget, low frill thing. And then it started producing real returns. And then we said, you know what, like, we really need to double down on this concept of like, we need its own
Now,
independent team and
this is the
developers.
thing that like I think that I talked about this like in 2017 about productization of consulting services, and someone talked about it before me because I didn't make that up, and someone talked about it before that, right? But like the only thing I figured out, you can't productize a service is like a haircut, but everything else feels like it's ripe for productization. Because like I just don't see why we can't start thinking and unbundling services into different a la carte items you can choose and buy, and then execute on that. And so like, well, often it is, and this is happening in consulting right now in real time, because you're seeing, I won't name the firm, but you can go Google it. They're getting in trouble because they're GPTing their product for their customers, and their customers are like, could have done that themselves, and looking at these big bills and all these hours. So how do you internally, what's that meeting like when you go with the stack of like low cost to deliver, high margin, work that you've kept within your own walls, and you're going to go outside and go to market with this? Like, what was that like, that meeting when you said, hey, did you pitch it? Who pitched it? How was it pitched? That we're going to take this outside of our firm. Instead of just being a better, faster way of doing it internally, we're going to go outside, and we're not going to sell it to lawyers.
I think the thing that we realized, it actually wasn't a particularly difficult conversation, or one that I thought was particularly risky. When we sat down as partners, and I said, hey, Lightning Docs basically produced half the revenue that the law firm in a competing business was producing at the time, and it did it, and the margin on that side was tremendous. And I was like, it seems like this is actually the big, like from a resource allocation perspective, it sounds like you guys actually should get rid of me in the law firm and send me over to Lightning Docs and start building a real team out there. Because if we can build this business much faster, right, which we likely can, because right now we haven't mentioned to anybody that it even exists. And so just imagine if we start going to trade shows and otherwise try to market this thing, we could really build this business into a serious business. And I think the same aspects that we liked about it, which was, it's still, it's not a heavy headache business. It's not, services, particularly legal services, is you basically this constant tension of too many attorneys, too little attorneys, right? You're just like this. And so you're burning your people out, and it's any services, doesn't matter whether attorneys or accountants, any professional services, you're maintaining this balance, this work-life balance of the professionals involved, right? Trying to maintain enough slack in the system to take on new customers, but then the supply demand is oftentimes unequal. And you just look at it, something like a software product, and goes, well, you could add 100 users tomorrow, and as long as the software is good software, they don't need a big onboarding process. It's not, you shouldn't have that tension nearly as what it is. And so it was actually a really easy conversation internally, and I said, hey, I think it makes sense for me to kind of spend time, energy, and resource there. And we should play the same when we're already working with a similar customer base. And we also felt really honest about it too, because I thought that the nice part was, and I still feel the same way. Like the law firm business is still there; it still does great, but it's not. But it's and it really serves ultimately what I found is quite different customers, right? We're looking at you talked about ICP a second ago. Well, actually, more often than not, really for someone like Lightning Docs, is you've probably outgrown your law firm. That's actually what's happened, because you were either going to solve the problem by bringing in a bunch of your own lawyers and closing people and all this apparatus to close these loans, right? And you're going to go hire a bunch of law firms to create your own templates and basically create your own version of a Lightning Docs, right? That's how you have to do it. Because the number one competitor I actually have today is just DIY, and it's people that are mail merging their loan documents today, and they know it's risky, they know it's inefficient, they've got all these problems in it, but it's sunk cost bias where they've already invested a ton of money to try to do this. And so I'm just kind of going like, well, hey, like, you're a really good originator. Why are you doing this? Like, that's not what makes you money. Like, why are you in the document management business? You should, just as much as you didn't build your own QuickBooks. Like, why are you? Well,
there's an awareness that there's an eventuality that's going to be automated. So it may as well be you, right? Because look, this is going to be automated by somebody. Let's be first movers and capture revenue here that's being captured. Because like, what I find interesting, parallel to this, is property management. And they're really struggling right now with innovation and doing things better. They're being pressed on both sides. Top revenues down, insurance, interest rate, and taxes are up. The operating model in the middle is just getting squished. It's like a flat burger, whatever you call it. But like they're just absolutely losing all their operating margin, but they're still stuck on the fact that if they were to innovate, they might be giving up certain revenue for speculative revenue, right? Even though they're certain that 100% sure that the world could buy this, there still is a reluctance to buy it from a prop tech perspective or adopt it from an operations perspective. And it's kind of sad because the people that are paying the price are the people on the ground or the people or the residents. Like and that's the part that's like, this is like the innovator's dilemma is really hot right now in property management because they don't know what revenue to give up. Like even as a lawyer, right? Like let's say, I mean, I'm going to guess 2,200 hours a year, maybe 2,400. And like to go and even to go to a trade show, that's like 30 hours of non-billable work.
Yes.
And so that revenue is offset by speculative probability chance that you might be able to convert. And so like that's unnatural for professional services firms. They're allergic to that. And so it's interesting to always watch like a big firm. And the ones that have done it well are the ones that went public. So like Accenture went public, IBM went public, and I don't know, law firms. But when they go public, their mentality has to shift from a partner model to a CEO corporate model. And they've got a balance sheet now to invest in this sort of stuff instead of sweeping out the profits every single year and distributing it down the funnel, the partner funnel. And so like that change of mentality, it's a new business. It's a new way of working. And I just don't see, I haven't seen it, ever since the IPOs of PwC and Accenture in like 2004, three, I think it was three, maybe later, maybe early, maybe 01. I haven't seen anything really go for it because it was really uncomfortable for a lot of the partners that had their revenue models that were ready baked. Like they had their cabins in the woods and they had their houses and their cars and all this stuff. And it was all very cash flowing. So the question I've got for you is I don't get me wrong. I believe in the partner model has a purpose for what it does. And there's elements to it that are required. What does, in your mind, we're deviating from the getting hell yes conversation, but what is the articling lawyer of the future going to do?
Yeah.
Because all this stuff that you're talking about, all the crap work, that was their job. I'm going to put it to an articling student or articling lawyer, and they're going to do that garbage work, and I'm going to go keep selling. So what are they going to do? Or how do you maybe even today, what do your articling lawyers do today to build that knowledge, that practice, all that stuff?
Yeah. So that was that same book that I told you about, Tomorrow's Lawyers, right? The speculation at the time, and now in the modern age of AI, you can even chip away at some of these. But the three acts of a lawyer that the author posited would be strategy, negotiation, and tactics. Right?
Yeah.
Unless the lawyer was working within one of those three realms, everything that they were doing was going to be either automated or otherwise taken out of their domain. And even so, the one that's really interesting to me, particularly in the age of AI, is negotiation.
Yeah.
Right? Because AI is actually pretty good at this. And so, because it's read every document that exists out there. And so it actually understands quite quickly is where is this document leaning. I did this the other day. I mean, actually last night I was in there and I was going through, and I was actually in a different context. I was asking our CPAs a question, and I said, let me just dump this in chat real fast and ask chat the exact same question and see what its thoughts are. And it was just pulling apart, and it was giving, and I still sent the underlying question to the CPA because I wanted, chat is not my CPA.
Yeah.
But it shows you that the tools are out there to even start chipping away at what people really thought lawyers would be particularly good at, which is, hey, use the knowledge bank of even negotiate. And some of that I think is harder to do. So let's just use the examples. I'm in the private lending space, right? So when we negotiate a lot with borrowers, counsel for more complex loan transactions. And there's a lot of art in that because, not all negotiations are the same. Understanding the leverage position you have in that negotiation.
Yes.
A good lawyer is going to understand who has the cards and how, and the appetite for the parties to enter into the deal. Right. And so that is a bit of an art, and sure, you could try to prompt your way through it of saying, well, what are the things I really care about? But, when I've dumped, contracts into any sort of LLM, usually they're picking apart things that are not irrelevant, but it's having a hard time saying, hey, these 5 things, like, when we train lawyers, I would say, hey, when the borrower gives you the bloody red line, right? You're looking through this and you're like, oh, you're justifying your wage today, my good sir, right? And so
I've seen them with a semicolon was replaced with a comma, and I'm like, you got to be kidding me, really?
Yeah. How many times did you dump the word reasonable in this, right? So we've all seen it, right? And so and when you do that, and I always say, a good lawyer, I think, in response to that, would just say this: hey, appreciate what you've done for your client here. Are there 3 to 5 things that you think are absolutely non-negotiable here that we can actually discuss? Because I just think that we're going to have a lot of back and forth that neither of our clients really want us to have. And so what are the 3 to 5 things that are incredibly important to you that you think we should discuss? Right. I think that sort of tactical strategy tends to be the stuff that I think really good lawyers will continue to exist for, and be able to manage the emotions and other aspects of it, and to try. And a lot of it is persuade. Really good lawyers persuade, right?
Well, I think there's. I'm kind of allergic to the word persuade, but I think there's an element of like force ranking the priorities and then matching that with where we can give and take. Right, like the Chris Voss approach to negotiation. But let's figure out what is the priority of the opposition, plaintiff, defendant, whatever, and understand how we can begin to understand. Because like your point, like it may give me a list of 5 things, but it's not going to give me the weighting of the 5 things, and the weighting of 5 things and the negotiability of all those 5 things. Like that's the thing that I think that is really interesting where legal goes. Because like, and the CPA conversation, same thing, right? How do you apply? It's going to be the application of your context in the tax law or the tax application, and then your ability to be able to articulate your situation and then execute on it. And that's gonna be a real hard part. And I think the things is like, ultimately, there still is an element of, I might want to prepare a lot of what I want to do in a GPT, so I'm comfortable with it. Because like it used to be, you get a document or a letter or whatever written from the lawyer, and then you got to kind of ingest it in real time because the meter is ticking loud. But now it's nice to get comfortable with the law before you have that legal conversation. So you understand the risks, you understand, and the lawyer's going to know you WebMD'd it, and that you kind of came in maybe over-informed about the wrong things. But at least you're informed about legal conversation, you understand the risks. But that still takes a bit of diligence in being comfortable with the GPT and being able to ask it the right questions. Don't look at this and tell me if I'm right or wrong. Look at this and help me speak like a lawyer. Like, what are the risks? What's the other side going to do? How are they going to do it? Try and think like a lawyer, and that's not always obvious. And so it's going to be. I think it's going to be a while. But I am thinking about one of our kids. I think would be a great lawyer, and so I'm just thinking about what that looks like as a career. And so when it gets into, as your point, strategy, negotiating tactics, that's going to be it, because it's going to be knowing. It's like watching the football game last night, like understanding those rules. And you're a Miami fan. We're partial to Indiana because of a bunch of different reasons. Big 10 people, but like the or Big 18, whatever you want to call it. But the way that Cignetti was managing that game last night, it was very. It was very methodical. And then when he did that call, that 4th and 5, and he did the top play, I was like, there's no planet. I was texting my kid, he's in PA, and I'm like, there's no planet where anybody saw that call happening. And then you look at the replay of that call, and the way the D's they spread out all the wide receivers, so it looked like a pass. You got Mendoza back there, looks like a pass. It's 5 yards. No one's doing a QB draw on 5 yards. There's no one behind him to do a tush push. So this is what the play is, and then boom down the middle. And it was just like, that was like double thinking the chess match, and that's the stuff that lawyers are going to do. Like you look at Tony La Russa, right, the old manager for the A's and then the Cardinals. He was a lawyer by trade, right? The way he managed a baseball game, it was just like all strategy, tactics, and negotiation ultimately. But the maneuvering of the understanding the rules, the way things work, the probabilities of everything, that's going to be the future lawyer. And that's going to be a fun job to have. I'm optimistic the legal profession is going to be much more engaging and intellectually stimulating than it has been in the past.
Well, and Guillermo, that's the thing. Like the first 5 years of my career was me staying up late at night writing loan docs, and it sucked. Yeah. Right. Like I'm not, reminiscing about the good old years of writing my own docs. right? Like
the same with an auditor,
great
right?
step
The
forward.
same with an auditor, the same with a first year associate consultant. Like they were all, we used to call them character building. Like literally I would talk to somebody who'd just be hired up and I said, hey, okay, the next month, this is going to be a character building job. And you got to go count this, go down there, do this, and it's going to be character building. And that was like the code for this is going to suck and it's going to be a lot of work, but that's part of the job.
It's part of the job.
When you take a look at, not everyone buys, we'll wrap this up real quick here.
Yeah.
Not everyone buys, you hear some no's now and then. What kind of objections do you hear?
Yeah, the biggest one that I run into is ultimately the DIY person who's, well, I already have my own system and it's inefficient. And then you're just trying to explain to them the legal, because ultimately what you're really willing to accept is a higher level of risk than I think is probably acceptable ultimately, for not a great reason. But challenging someone's, because now what you're really pushing back on is their appetite for risk, and that's very personal in nature.
Yeah, risk is a very funny concept because it's all relative to your life experience.
Yes.
If you've never been in a lawsuit before, that first lawsuit is flippin' scary. If you've never been deposed before, that first deposition is flippin' scary. If you've never been sued, it's flippin' scary. But if you've been through it and you understand that it's not personal, it's actually a thing, and if there's a reason for it all, then you kind of get it. And I think that's the big, huge part that will start, products like this will begin to optimize for, is that ultimately there's going to be a point where it's not worth DIYing it because it's going to be just more cost effective on the risk return basis. Correct. And actually it's not even worth my time to try and figure it out. I don't want to build it. I don't want to test it. I just want to use it.
And that's exactly right. And it tends to work. So, when we're meeting with people kind of that are starting to scale, right? Say they've built a real business. They're doing, called 10 to 30 loans per month, but they're having a hard time or trying to move into other states. That's an ideal place because they don't want to build, any sort of document apparatus. You don't want to, but once you've actually built the apparatus, then it's really hard because you've got lawyers and you've got this whole team. You've built this whole thing. Even if you don't like it, I always tell people, I really dislike our practice management software at the law firm. Like knowing what I know, I would have never purchased again. But also, I'm not changing to anything else, right? Because I'm the pain we suffer through to get here, right? That sunk cost bias has a lot of value. And so
that's almost structural software versus transactional software. Like structural software is how you do your business, and then transactional software is this business that I want to do.
Yes.
And it's easy to flip on this business I want to do software, and easy to get in and get out, right? Because your options, I'm still trying to have someone teach me otherwise, but are usually, do it yourself, hire, vend it, or third party it, or do software and technology. And which brings it right back to doing it yourself again, So it's like those three things ultimately end up being the options that you have to choose for. And so you've got your objection is I'm going to just do it myself. Then that's their appetite for risk. Maybe that's their technical sophistication. Well, they've done the risk versus reward, the cost of doing it. I'm done, right? But they may find, though, as they get into volume, that I'm done doing this myself. I don't want to make my own chocolate chip cookies. I want to just get the reliable one, or worse, someone hires, leaves. The person that did that hires, leaves, or retires.
That's exactly right. Yeah. And they start, and that's usually the pain point that even for the people that have done it at scale, because then it comes, then the CEO goes, hey, we should go venture into this one other area. It's a vertical that we're adjacent to. So it makes a ton of sense. And they're like, but you don't understand. Our entire document stack was not built for that vertical. And so that is not something easy to do. And so you oftentimes end up in situations in which the foundation which it was built upon is not actually scalable, even though it's believed to be.
Yeah. It might have been convenient for a while.
Right.
And easy to execute because it didn't have to absorb change, but then that change, that function goes away, change adapts, whatever.
That's right.
Very cool. When you go back and look back over your career, how do you find, what kind of advice would you give yourself when you first started out? Because you're parallel paths of lawyer and an entrepreneur, CEO, founder, and then riding both horses at the same time. Yeah. Those are very different halves of the brain. That could be something, but what do you go back and look at your life and go, I wish I would have done this. I could have done this differently. This is how I would have done it. What kind of advice would you give yourself?
Yeah, it's interesting. The biggest component I think for me was I didn't appreciate. I enjoyed my career fairly early into it. I didn't know why, And it took about 5 or 10 years to really understand, go like, oh, like kind of have this math brain. Like my son, I see it my son as well. Like you'll just see him and he's in the corner and he's like, what's 700 times 72? And he's just like running equations in his head randomly.
Yeah.
Right. And so, and being able to do that and so like a lot of that is just like, I get to do a lot of math at work and I really enjoy that. And then when you think about document automation, it's really kind of basically algebra through language, right? Like what's the shortest path to get to the right equation, right? And can I simplify the formula? Can I tighten the formula? So like there's a lot of being able to try to come up with efficient language and that has its own math basis. And so for me, it was just an appreciation like, oh, I already kind of had these preconceived like skills, whatever, strengths that I never appreciated and then so could I like really dive deep on those strengths? So I'm not, and then I've got a million weaknesses, but trying to avoid working so hard on mitigating weaknesses and just really triple downing on strengths and going, hey, like what are the areas in which I can actually apply these skills? Because just like anyone else, right? Like when I'm in my strength zone, like it's not work. Like I love,
it's not work.
I'm the nerd who's just like in Excel a lot, just to kind of tinker around and go like, hey, like could I just test a hypothesis out? If this happened the other day, and I'm kind of sitting looking at our data, and one of the things we track a ton at the organization is, kind of how am I performing year over year, looking at month to date, right? Like that's just a common kind of metric to understand, have an appreciation for how the business is growing. So I was just sitting, I'm like, I wonder if these are like correlated. Like if I actually can I take my month to date progress and does it carry through the remainder of the month? So if we're starting the month at 30%, do we actually finish the month 30% year over year, right? Is that actually a truism that kind of holds? So like, and they could just start testing. And so like, but I'm like just sitting, and my wife's like, what's wrong with you? Because I'm just sitting there like, and I've got 6 spreadsheets up and I'm kind of tinkering through them. And I was like, I think I figured it out. Like, and it did, like it actually held through. And it was like I now go on that spreadsheet just to like look at my little Mona Lisa projection thing and be like, oh yeah, like within 3% accuracy on an average month, like we know exactly where we're going to head. And it's fun to be in that zone. I love it.
Do you find yourself that you recognize patterns or white space better than most people?
Yes.
And that kind of bothers you? Like when you see white space, you can't unsee it ever again?
I don't know. Like I like to solve problems, right? Like I remember a mentor very early in my career, and she was awesome. And she's like, you're going to get paid in proportion to the number of problems you solve.
Yeah.
And
there's a Bob Burg's got in his book, The Go-Giver, he calls it the 5 stratospheric laws of success. And it's like the amount that you give more than you take, the amount of people that you serve, how well you serve them, a couple more. But really that's what it's about. Like, it's funny, like I've got a post kind of brewing here on like the 2 most important sales books I read last year was like Zig Ziglar's book on art of closing the sale. The other one was the 5 love languages for a successful marriage, because they're both the same thing. They're both the exact same.
Yes. And also too, is it's really funny. That's like my other, the people in the office are just like, you're such a loser. Cause like, I love like self-help books. Like I can read just volumes on like, and things like on Enneagrams and other stuff. I just think it's fascinating, right? Like, I think it's really fascinating to understand my own motivations and the motivations of others, right? And to be able to have some, and maybe it goes back to that mathematically, to have some rational basis for it rather than purely emotional gut instinct. Right?
Well, I think that and I think you're gonna go soon, but like, I think there's a gap, and so I'm equally as fascinated, and I love learning about the decision making framework of the brain, because it's kind of an unexplainable if you don't think about how the anthropology of how we make decisions. Yes. And if you boil down to the limbic part of the brain, fight or flight, feed and breed, and then neocortex, modern brain, justification of all those decisions, how am I going to make this work? Like, it's kind of interesting to kind of see how you can frame conversations to appeal to those parts of the decision-making framework of the brain. And then I think on the opposite side of it, it's also interesting to kind of wonder why something didn't work, and kind of like figure out why this doesn't work, and then recognize that ultimately we're all cavemen. And then, if you get into, the class, I got a D+ in my first year, anthropology. But like, if you think of the anthropology of it all, that's actually what's emerging. I think what's really cool about tech is that tech right now is removing all the things that distracted us from being ourselves. And now we're getting the true human Homo sapien is starting to emerge because we have nothing to protect us.
Yes.
To insulate ourselves from being Homo sapiens anymore. So it's kind of interesting to get it, and that's a separate conversation, but like getting into the self-helpness of it all, because they reveal, like, Daniel Pink, whatever, I can say so many books about how the human brain operates. And then it's just how it operates in different contexts. And so we talked about you and like good at math, like structural math, but then obviously as a lawyer, good at English and context and comprehension. That bridge point is a gap right now because AI isn't great at doing that. And I think that what makes us uniquely human beings, and I think also like unique sellers, part of the Getting Honest conversation, is that an acknowledgement of a gap, because gaps haven't been recorded by the GPT yet, because the gaps didn't exist. It's the non-event. And the non-event is the gap that you can dig through and figure out. And that's where opportunity emerges, because the people haven't thought about it yet, or maybe they have, but it's been peripheral. But be able to capture that thought, capture that gap, and then articulate that. And then, as I said earlier, like turn that service, unbundle it, productize, specialize in it, productize it, and then bring that to market. That is the thing that entrepreneurs are like gifted with, is this desire to add value to the current situation.
Yes.
Almost blindly, or because you can't, it's like a moth to a light bulb, can't help it,
Right. And
really,
I think that's, the only other thing to add is like, you just said, like, anything I regret, like, I think that's exactly right. Like dive deep into that inclination to just solve the problem. Don't focus so much on the downside risk of solving the problem. Like, we may destroy our law firm all along the way by doing this, but like, that's okay. Like, someone else is going to do this anyways. Right. So do you want to be the disruptor, or do you want to be the disrupted?
Yeah.
Right? Particularly in today's age of technology, is one of those two things is likely true.
I would completely agree. It's a non-zero opportunity, non-zero probability.
Right.
And it's like, and recognizing that those that move first are going to have an outsized return.
Of course.
Right. Wonderful. Who should we have on next?
So there's a gentleman who I love. He's also just a student through and through. His name's Dylan Freeman. He is he works for a private lending company called Fidelity. I think it's Fidelity Bridge, but I'll get you his contact information. And he is really an incredible student of understanding both finance and understanding, and he's obviously a loan originator, so he knows these products that we're talking about. But he's a person that I think is just, and he's also a phenomenal LinkedIn. So he's the influencer of the private lending community. Which
wow! There you go.
But I think also too is not for your not for purposes of being liked or otherwise, but someone who's actually kind of thought through, like, how is this platform actually optimized, right?
Mm-hmm.
If you're going to actually use it to try to expand your reach, how do you actually do that? And he's just a person that I think plays that game incredibly well and has used it to actually build his business a lot. And so he'll have beyond being a financial wealth of knowledge, also a person who actually understands how to use social media to build your own brand and your own business. Really.
Oh, that's outstanding. I was just actually, as part of my strategy, I was doing my kind of like OKRs for the year, and it's like what I want to do with my LinkedIn. And I'm already dug in. I'm like dialing in. I'm actually actively trying to solve that problem. That's outstanding. Thank you for recommending.
He's a great person for that. I have a tremendous amount of respect for him, and he's a great, human, great father, great husband.
Wonderful. Cool. Okay, we'll get him going. We'll get him dialed up. Look, Nema, this was outstanding conversation. Thank you for going kind of the depths in terms of how the origination, the type of how the business makes money, how that creates how the evolution of the business created an efficiency, how you're able to kind of like specialize it, productize it, automate it, make it better for everybody else. That's outstanding. Love the story, or just even the awareness of like the tension that it goes from being a revenue generator as a fee hourly fee-based revenue generator into creating a product. I hope everyone who is in the service business hears that part of the story out loud, because is that there's an eventuality to it all, and it's important to be a first mover and at least innovate. And I hope these firms, that if there are people who are listening in firms, understand there's a productization of your whole business that needs to be actively managed and being deliberate about it. Otherwise, you're just going to get passed. It's going to be an opt out, and your revenues will all of a sudden disappear. It's been great. Thank you very much. Again, brought to you by IrisDX, AI remote and on-site inspection maintenance software for property management. It's an outstanding conversation. If you're listening on LinkedIn and you're catching it on the playback, any comments will both get a notification there. On the podcast, Apple, Spotify, like, subscribe, follow. That always helps everyone see the message. And this has been outstanding. This is a wonderful conversation. Thank you for sharing everything. Thanks for going over a little bit. And gosh, wish you the best for the rest of the week.
Same to you, Gamo. Really appreciate you. Take care.
All right, take care. Take care, everyone. We're good, man.